Going back to 2018, I've been pretty consistent about tariffs. They're a bad idea in theory and usually even a worse idea in practice. They raise costs, disrupt supply chains, slow demand, and they invite retaliation. Basically, if you want to make an economy less efficient, well, tariffs are a pretty great way to start. Fast forward to this year, and the noise around tariffs hit a level that made 2018 look like a light warm-up. The president stood in the Rose Garden holding up posters with giant numbers, and markets literally lost their minds. Economists grabbed their slide rules, forecasts were cut, and everyone started talking like the apocalypse was on the calendar. And then the OECD stepped in. This is a global think tank made up of 38 advanced economies. When they talk, markets kind of listen, and what they said was the exact opposite of what everybody feared. They took their US GDP forecast from 1.6% to 1.8% to 2%. That's not a collapsing economy. First reason is simple. The full tariff impact has not yet hit. Companies front-loaded imports, they used inventories, they absorbed some of the costs. Policy moved fast, but in reality, it kind of lagged. The second reason is a little bit better. The economy actually accelerated in key places. Retail sales strengthened, personal income rose, business output improved. Earnings call transcripts showed companies still investing, not retreating. That is not a panic economy. That is a resilient economy. And the third reason is tech. AI-related investment has been a massive global driver. ICT equipment spending in the US is booming. Asia benefits, supply chains benefits. The OECD calls this one of the most powerful growth engines in the world right now. And of course, the US consumer. The consumer. Sentiment may be soft, but real incomes are holding up. Employment is cooled, but it's not completely collapsed. Inflation expectations are pretty much anchored, and consumers, well, they're still spending. Does that mean tariffs won't hurt later? Well, no, of course not. Once inventories run out and margins tighten, the drag may grow a little bit. But right now, the data shows an economy that is adapting faster than anyone expected. So your truth bomb for today is this. Panic follows the headlines, but wealth, it follows the data.